I predict in the next 10 years that crypto, blockchain, Bitcoin, all of this innovation will be the 12th sector of the S&P.
Left. Bitcoin down below 20,000. Sam Bankman-Fried, why are you bullish?
I am hopeful that the arrest of Mr. Bankman-Fried, the founder and former CEO of FTX, means he will be held accountable for the fraud he has committed and the harm he has caused.
And Kevin O'Leary, I was shocked. He told me even after the facts that have come out from the bankruptcy proceedings, they lost money. They lost money potentially using other people's money. I don't know how much bigger of an advantage you can have doing that. And Kevin says, I would still invest in him.
You said to find crypto investment opportunities that met my own rigorous standards, that was your phrase, of compliance. I entered into this relationship with FTX. It has some of the best crypto exchange offerings I've seen on the market.
Yes.
Given that you were the spokesman and ambassador for this company,
yes, because
what kind of diligence did you do around this issue of compliance?
Thanks for tuning in to another episode of Crypto Savvy. Today, we continue our coverage of the FTX scandal and its impact on the cryptocurrency market. As we've seen, Kevin O'Leary's reputation has been put on the line, and his involvement with FTX has raised questions about his credibility as a spokesperson for the crypto industry. Crypto insiders were stunned by the speed of FTX's downfall. Before the collapse, the CEO of FTX, Sam Bankman-Fried, was highly regarded as an influential figure in the industry, with FTX considered one of the most stable and responsible firms in the loosely regulated industry. Jared Elias, a Harvard Law School bankruptcy professor, called the speed of the failure unbelievable. The issues for FTX began when Changpeng Zhao, CEO of Binance, sold his stake in FTX back to Bankman-Fried and expressed concerns about the company's financial stability. This announcement caused the value of FTT tokens to drop and resulted in investors withdrawing their funds, causing an $8 billion shortfall. Binance offered to help, but later pulled out, forcing FTX to file for bankruptcy. In a recent interview on CNBC's Squawk Box, O'Leary discussed his investment in FTX and his conversation with its co-founder, Sam Bankman-Fried. Let's take a closer look at what he had to say.
I felt that getting involved when I was approached with Sam Bankman-Fried, that I could get an inside seat on what was considered then, and I gotta tell you, the institutional interest in FTX on the U.S. equity was unbelievable. The amount of people that approached me saying, how do I get a piece of this deal? And I said at that time, I am a paid spokesperson. I cannot bring you in as an LP. Not a single dollar that I lost is anybody else's money except mine. That's important for me because that's an issue.
Given that you were the spokesman and ambassador for this company,
yes, because
what kind of diligence did you do around this issue of compliance, given where we sit today?
I obviously know all the institutional investors in this deal. We all look like idiots. Let's put that on the table, okay? We relied on each other's due diligence, but we also relied on another investment theme that I felt drove a lot of interest in FTX. Sam Bankman-Fried is an American. His parents are American compliance lawyers. There were no other American large exchanges to invest in if you wanted to invest in crypto as an infrastructure play. So many of us said, wait a second, who's coming to this deal? We knew, for example,
this sounds like
Tiger.
This sounds like groupthink.
Did
you know there was no CFO?
Look, at the end of the day, to say that there was no CFO is also a bit of a falsehood. This was a nascent industry with a disruptor at its helm, creating positions that didn't have traditional names, okay? That's just the way it was. In retrospect, yes, it's a mistake. However, I feel obliged at this point to go to the end of this, particularly...
What does that mean?
It means that I need to find where the money went. I'm going to start with my own journey, with my own account. Bankman-Fried reached out to me last Saturday, and I said, look, Sam, I am just one investor, but my account has a zero in it, and there are no accounting records. Where did the money go? And to the extent you can help me, tell me, point me in the direction, because I will, on behalf of every other shareholder, go find where this money is. The next day we talked for over an hour. And he walked me through his scenario, and I learned a lot.
Oh,
Now,
so what did you learn?
Sorry?
What did you learn?
I learned, first of all, I said, what was the large drawdown of your capital? Where did the cash go? One of the biggest uses of cash was to buy back his shares from Binance, which owns 20% of his exchange. And the reason he had to do that, according to him, was that every time they applied for a license anywhere, the Know Your Client got jammed up with Binance, where the ownership is opaque. And he had to buy it back. That cost him a lot. Couple of $1 billion.
But do you think that he was taking customer funds to do that?
Yeah. Did he take that money from customers to get it?
Well, the only way to answer that question, and I told him, and he agreed. I said, look, Sam, you start this journey with me, and wherever the chips fall, that's on you. Because, we're talking about this. I'm going to pursue it.
The broader consequences of the FTX scandal for the cryptocurrency industry are yet to be seen, but it has the potential to deter already cautious investors who are wary of stability and security issues. Customers may not be able to recover their assets, leading to potential legal action. Moreover, the collapse of FTX may prompt the SEC and other regulators to increase scrutiny on cryptocurrencies, while lawmakers in Congress may look at enacting new laws governing digital tokens and exchanges.
Senator, I want to move on to crypto. You've been working so diligently on potential legislation. I want to talk about that. Disgraced FTX CEO Sam Bankman-Fried claims that he did not try to commit fraud. He's embarrassed by his mistakes, but he messed up, he said during the New York Times Dealbook Summit yesterday. Here's a bit of that. Watch.
I also, frankly, made a mistake that I feel pretty embarrassed to have made. I mean, a lot of these are, but I substantially underestimated what the scale of a market crash could look like and what the speed of it could look like.
So billions of dollars have gone missing. What do you think happened? How did this happen?
Well, I think that these were well-educated, sophisticated fraudsters. I think it's obviously fraud. So the Justice Department needs to get involved. There's a reason that they offshored most of these companies, 135 companies, in a sophisticated mess of businesses designed to obfuscate what they were doing. And what they were doing was rehypothecating, meaning lending over and over the same monies and then using customer funds to do their equity investing and their political contributions. This was just pure and simple, good old-fashioned fraud. And it needs to be handled through the criminal procedures.
I was speaking with Perianne Boring earlier from the Digital Commerce, and she says, why is it that the SEC has blocked any opportunity to bring a regulated product to market, a regulated digital product to market? I mean, Senator, you've introduced a bill with New York Senator Kirsten Gillibrand called the Responsible Financial Innovation Act. It would fully integrate digital assets into our existing financial system. Where does that stand? And tell us more about it.
Well, our bill is crying to be passed. The examples we're seeing where FTX and its ripple effect through the digital asset economy is a perfect indication about why our bill is so important. Our bill would put commodities in the CFTC. It would put the SEC in charge of the largest number of digital assets because they look like securities. And we need to get this bill through. So we'll be reintroducing it in January and encourage our colleagues that it is the lack of regulation in this space that is allowing things like FTX to exist without regulation. It's time for a regulatory framework that, yes, authorizes and encourages and fosters innovation, but that also provides consumer protection and disclosure.
Well, I mean, it's a little late, right? I mean, how long have you been working on this, and why haven't your colleagues brought it to the floor? Why aren't we seeing this? Is it because things like FTX and lobbyists were stopping any real legislation in terms of bringing a regulated digital product to the floor? Again, I go back to this question. question of he's donating $40 million to lawmakers and they're going easy on him.
I am hopeful that the real reason that we haven't done it is because too many senators and congressmen don't understand this space, and they're not ready to tackle it just in terms of their own comfort level with it. But now, hopefully, now that they've seen how this industry running unchecked is causing a lot of financial distress, that it's time to regulate it. It's time for members of the Senate and House to get educated and informed about this industry and for us to move forward. So Senator Gillibrand and I will be working starting in January with a full court press to get our legislation passed.
Senator, who should be the overseers of digital? That's another question in the market. Is it the SEC? Is it the CFTC? There's a lot of hands on deck here. Who will oversee digital assets?
Both. The Commodity Futures Trading Commission will definitely have Bitcoin, because Bitcoin is clearly a commodity. It is fully decentralized. And then other assets will probably be in large part at the SEC. So we're going to have to provide them with adequate personnel and tools and guidance and statutes, and they'll have to make regulations that will allow them to conduct the adequate consumer protections that are necessary with regard to cryptocurrencies that behave like securities.
Senator, it's a great interview. We so appreciate it.
In conclusion, the FTX scandal involving Kevin O'Leary has had significant repercussions for the crypto industry and has called into question the credibility of some of its high-profile spokespeople. The collapse of FTX has highlighted the risks associated with investing in cryptocurrency exchanges and the importance of due diligence. While Kevin O'Leary has taken steps to address his involvement in the scandal, it remains to be seen how this will impact his reputation and his future involvement in the crypto industry. As always, it is important for investors to be cautious and informed when navigating the ever-evolving world of cryptocurrency. With that in mind, what steps can investors take to protect themselves from similar scandals in the future? And how can the crypto industry ensure that it maintains transparency and trust with its investors? Comment below and let's engage. And as always, if you enjoyed this video, please leave a like and consider subscribing to our channel for more interesting crypto-related content.